Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to consider the financial earnings of the Tesla, the much loved electric car company. And it is not only just an electric car company, but it has forays into the space with SpaceX, and also it has other businesses like Solar City, for which we have the ads running on its homepage at the moment. So this is a conglomerate of sort with offerings of innovation and futuristic technologies with the aim to reduce the carbon footprint, and that is why the Tesla's electric car came into being at the first place. And after struggling for many years, it finally took off around the pandemic days 2020-21, and now it has become an established car maker. But of late, we are seeing that as the company is maturing and becoming a household name across the world, its profit margin is coming under pressure, and as it is trying to gain market share while keeping its pricing economical, it is also facing these competitive pressures, and the scale is helping the company in bringing in more revenues, but the cost of revenues is also higher in comparison to what it was a year back. And that is the major theme which has impacted the share price performance over last couple of days after the earnings were announced for the Tesla's fourth quarter of fiscal year 2023. So I think what we are experiencing here in last couple of days is the kind of a precursor, or you can say a preview of what lies ahead for the company's prospects in the first half of this year in particular, and maybe a whole year, because for last year 2023 we had seen that the stock market was booming. We had many of the stocks rallying higher and higher, but in that kind of environment as well, the Tesla was not really flying sky high as it was doing in earlier year. And now, as the things are moderating, we are seeing some pressure building up on the upper price for the Tesla, and it has declined significantly around a quarter of its total valuation has been wiped out in just a month of this new financial year. And in this kind of a environment, I feel we have to look at the major picture. We have to see what is happening in the industry, in the market, in the macroeconomic situation, and after that, we can consider whether to invest or to sit on the sidelines or to go with the momentum and take new shorting positions. So for all this, we will be first taking a look on its financial reports, and afterwards we will consider the share price performance over last couple of days, and then we will get to see the whole story for the stock. I think here we are not really getting. All right, the now we have changed, and I hope we will be able to now capture the screen, because for first couple of minutes the OBS wasn't really working well, and it failed to capture the screen in which we had this Tesla's homepage running. Now, as I am going to take you through the report, it was becoming imperative, and thankfully I spotted just in time. Now let us go to the report page, the fourth quarter earnings report for this Tesla. We have this publicly available document for the fourth quarter 2023 earnings, and it was released just a week back. If you want to go through the whole report, you can go to the investors relation page of the Tesla and you can download it, you can read it thoroughly, and then also make your mind. What I'm trying to do here is give you the context, give you the highlights of these earnings report and combine that with the share price performance to derive the inference of what lies ahead and how we can place ourselves for what is coming next. So, first thing first, we will be looking at the earnings for the last quarter, and in doing that, we will be comparing it with the prior quarters as well. For the revenue, we had some growth on the revenue side. Total revenue was up just 3% year on year. So the company wasn't really able to sell that much many more cars in comparison to what it was doing a year back, and some of it is also dependent on the constraints, production constraints the company has, and also the macroeconomic scenario has become a lot more challenging than what it was a year back. So all these factors are keeping the revenues from rising further, and also there have emerged multiple competitors for the electric cars in the market, and with that the market is maturing and now the people are having choices for their purchase of the electric car, and just a couple of years back the Tesla was the only game in the town in the form of a very attractive proposition of a futuristic car. But as we have seen that other traditional automakers have also jumped on this bandwagon and they have lined up their electrical models as well. So the company's future prospects have also been impacted by these developments. But apart from that, we have the Tesla. I think hopefully we will see it rebound. Maybe not immediately, but in course of time. But for the time being, for next couple of weeks, next couple of months, we have to go with the momentum, and that obviously looks bearish. When we considered this report, the first thing I said was that the revenues have been stagnant year on year. There is just 3% growth for the whole year. And if you look at the very important number of the profit margin, the operating margin, because this is the number which tells you how much the company is spending to earn each dollar, and with the operating margin shrinking to just 8.2, that means the company is spending more than 90 cents for each dollar it is earning, and that is reducing its net profit available to the common shareholders. A year back, the operating margin was at 16%, which can be considered quite robust, quite good in a automotive industry, because in the automotive industry the profit margin is very slim, and the Tesla is also now going the traditional car makers way with its profit margin, the operating margin shrinking to just double digits. But if you look at the net profit for this quarter, you will see that this quarter's net profit is damn too high in comparison to what it was making earning for prior quarters. That is simply because there has been one time release of the provisions for the income tax, deferred income tax, and that release of it is non-cash, but it is a provision. So we had that benefit for the company, and it pushed the net profit for the quarter higher by US dollar 5.9 billion. And if we deduct that, we get comparative numbers with the net income for the last quarter, apart from these release of provision amounting to just little above US dollar 2.1 billion. And in comparison to prior quarters net income, you will see that it is lower in comparison to the first half of this year as well as the same quarter of last year. It is just marginally higher by from the third quarter of 2023, and there has been slight improvement in the profit margin that points to the efforts being taken by the Tesla to recover and try to gain the advantage efficiency coming ahead. But that turnaround is likely to take time, and at least for next couple of quarters the things are likely to remain bearish for the Tesla, and that is why I feel that this decline, sharp decline which you have seen in last couple of days, is just the beginning. And as the days roll by, as the weeks roll by, we will see further decline and momentum remaining bearish for most part of this year. That is my expectation on the Tesla stock. Now we will also consider the cash flow statement. For that, we will have to go all the way down to its quarterly reports cash flow statement. Here is the cash flow statement, and in it you can see that the net cash generated by the company has been good enough, but it is just little above half a million. I think the precise number I will have to zoom in a bit to get the idea. All right. Okay, so the cash at hand at the beginning of the period is now increased to US dollar 17.189 billion. So there is a quite comfortable cash position. It has also reduced its debt in the last quarter, and I think with this comfortable cash position, the Tesla will keep investing and keep trying to figure out the ways to improve its operating margin and bring in more revenues and more net profit. That is one thing you can be quite sure of Elon Musk, the Mercurial CEO and the founder of the Tesla. Now we head to the JForex 4 platform to see what lies ahead in the stock performance for the Tesla. This is the hourly chart to figure out the immediate term trajectory for the Tesla. It has been continuously declining for the most part of this year. It started the year close to US dollar 250 level. Now it is trading even below US dollar 200 mark. And if we compare the closing price of the Tesla just prior to the release of its earnings, and then in the subsequent days open price, you will see this gap which is quite close to 10 percentage point. From there on, it has recovered some lost ground, but still the impact has been brutal, and we have seen almost a quarter of the Tesla's valuation been wiped out in last couple of weeks for the month of January, and I'm not really expecting a turnaround anytime soon. Other than that, we can go with the flow and see if the Tesla doesn't really rise above the prior swing lows low, and if it continues to consolidate for a couple of days close to these price level below 200, I think we can indeed take our chances and go for the initiation of the short sale trade. But for that, it will become important for the Tesla stock to not really climb past the prior lows, as that will increase our confidence in these bearish momentum. Now, if we have to consider the medium term prospects, the things are here also looking bearish. For the January, we have seen the Tesla nose diving from 250 odd to below 200, and as I said earlier, also it is not really likely to change its trajectory. And if we have to go and profit, I think short selling will be a better idea for the stock Tesla. And as and when we get a good risk reward ratio, we can indeed take our chances and expect these bearishness in the Tesla to remain to prevail and bring in good profit over next couple of quarters. So for medium term as well, the formation has been of lower lows and lower highs, pointing to the continuation of the bearish momentum in the medium term. Now, if we have to consider longer term, then you have to see that just 2 to 3 years back, it was rallying and it was almost twice of what it is today. But after dipping and giving up almost 75 percentage of its total valuation, the Tesla stock rebounded from around $100 and it went up quite close to 300. But it hasn't really been able to sustain this rise, and now again it has started to make the lower lows and lower highs formation. That means that the momentum from the longer term perspective is also now much more favorable for the bearishness, and we can expect these decline to last couple of months and maybe couple of quarters as well. We can't really be sure at this current juncture. So from a longer term perspective as well, looking at the formation of lower lows and lower highs with this consolidation phase also being capped below 300, I feel that any price level close to 250 or thereabout would be quite a good opportunity to go short on the Tesla. But at the current juncture, it is better to adopt a wait and watch approach, and as and when time arises, you can take your short of shorting the Tesla and expecting it to decline further towards 100 or even below that in coming quarters. So that's all from my side for today's session, where we consider the stock price performance and the financial performance of the Tesla, and the key takeaway has been that this bearishness is likely to last. It is not really going to change anytime soon, and we will do well to keep our losses in check and take the risk accordingly. Now it's time for me to sign off for the day. I will be back tomorrow with equally interesting stock to work with. Thank you all for joining in. See you next time. Till then, goodbye.